Hi, my name is Jean Davis. I'm the founder and CEO of the Institute of Financial Freedom and Investment Solutions. I want to welcome you to the Give Yourself a Raise program. Now, the purpose of this course is to empower you with the knowledge to lower your taxes to the legal minimum, which will create a positive cash flow. It's also to show you how to get an immediate pay increase on your paycheck without going to your boss. That's an extra $3, $4, or $500 or more in your paycheck. Also, is to help you understand the tax advantages of owning a home-based business. Begin to truly understand your business potential, how asset leveraging, royalties, and residual work to create wealth over time. This will also create positive cash flow. And by completing this course, you will be able to build your home-based business successfully, recruit new people in your business and keep them, as well as create wealth and retire early. Please be aware that each year mileage rates and deductions change, so please check irs.gov for updates. Let's begin. While working for the Internal Revenue Service and working with a financial firm here in Atlanta, Georgia, I learned the 90-10 rule as well as the 95-5 rule. 90% of Americans have 10% of the wealth, and 10% of Americans have 90% of the wealth. Also, 95% of Americans trade time for dollars and work for the 5%. Who are the 5%? The 5% are business owners. Now, I discovered there's only two ways to earn income. You're either trading time for dollars, which means that you're an employee, or you're self-employed, or you are owning or controlling assets that bring the dollar, assets that's being a business builder or a master investor, which we call capitalists. What you have to decide is what strategy will you choose to create wealth for yourself. Now, let's look at the two tax codes in America. As I stated before, when I used to work for the Internal Revenue Service, I was a tax examiner with the responsibility of auditing and examining tax preparers. And while working for the Internal Revenue Service, I noticed that the poor and middle class paid majority of all the taxes, while wealthy people paid little to no taxes at all. And I wanted to find out, was there a code, was there a law or something that we did not understand that we were not participating in? Well, I did discover after I left the Internal Revenue Service that there are two tax codes in America. You're either on the personal side, meaning that you work a job, or you're on the commercial side, meaning that you have a business. Let's check out the personal. Personal, which is a job, you're either a W-4 income earner, which means that when you get hired, you fill out a W-4 to tell your job, not the Internal Revenue Service, to tell your job how much taxes to take out of your paycheck. You file a 1040 or 1048 if you can itemize, and you have limited deductions. When you work your job, you get 7.65%. That is FICA, which is the Social Security, 15 to 35% federal withholdings, and depending on which state, you can pay anywhere from 6 to 8% and sometimes 9% state tax, which means that you lose a third of your income to taxes. So let's paint a bigger picture. If you made $50,000 a year, $15,000 you paid in taxes, you only take home $35,000. However, when you buy your home or your car, you qualify on the $50,000, not the $35,000, which put a lot of Americans in debt, and they began to live off of their credit cards. Look at the commercial tax code, which means that you have a business. You file normally if you're an independent contractor or you're in a home-based business. If you make over $600, you get a 1099 miscellaneous. You file a Schedule C with your 1040, and you qualify for over 400 tax deductions. Yes, you heard me clearly, 400 tax deductions. That means that some of the tax deductions, guys, is you get your business miles or actual vehicle expenses. You have to make that determination. You get business meals, communication, tools, wages, travel, gifts. Um, miles, entertainment, guys, you get to write off over 400 tax deductions. It just makes sense to have a home-based business. Now, what I want you to do, I want you to go to irs.gov. Go to irs.gov right now while I'm going over this information with you. And I want you to pull down the standard 1040 form, because that's what we're going to be looking at right now. At the top of the form, you have the label, filing status, and exemptions. The bottom of the form, lines 7 through 21, I'm talking about the regular 1040 form, okay, when you file your taxes. 7 through 21 is income that you pay taxes on. Imagine you just retired off your job and you received a pension. Go down to line 28. You still have to pay taxes on Social Security benefits. Okay, what if you lost your job and you receive unemployment compensation? Do you still pay taxes on that? Absolutely. Look at line 19. 19 says, yes, you pay taxes on money you made when you lost your job. Well, what if I made 50,000 on line 1 and from my Schedule C deductions I had a loss of 20,000, which your Schedule C deduction is on line 12. My taxable income has now dropped to 30,000. Therefore, if I can reduce my taxable income to 30,000, then it's true that I can reduce it to 20,000 or lower. Lines 23 through 35 just give you some small adjustments to income. Line 38 through 55 is just taxes and credits. But notice the standard deduction for single or married filing separately is $6,300. Married filing joint or qualifying widow is $12,600, and head of household is $9,250. The exemption amount is your adjusted gross income, which is $154,950 or less, is $4,000 per exemption. What does this mean? It means that your total deductions on your 1040 form is the standard deduction and your exemption. If you are single with one child, single filing status is $6,300 plus one child and self-exemption. So when you look at it, you're looking at 4,000 times the two people equals 8,000, a total deduction of 14,300, which means if I made 50,000 and my deduction amount of my money I don't pay taxes on is 14,300, then I pay taxes on 35,700. The amount you would have to pay for 2016 would be $4,701. That's a huge tax cost. So guys, listen, it pays to have a home-based business, and we will show you how it pays. What I want you to do right now, I'm going to allow you 1 minute to look at the information I just went over, and we will move to the next form. Please make note that tax forms are updated periodically and may have changed since the printing of this program. Check irs.gov for updates. Go ahead and take 1 minute and we will proceed to go over the Schedule A. 1 minute and let's go over the Schedule A. All right, let's go ahead and proceed to the Schedule A. Remember, just go to irs.gov, pull down Schedule A form, and you will be able to go over this information with me. Or you could just follow along. Okay? On the Schedule A, you only have 6 deductions you can take. They are listed below. Let's look at the itemized deductions. Now, normally when you itemize, you're telling the Internal Revenue Service that you have more than the standard deductions allowed for single, married, separate, filing separate, head of household. You're telling the IRS that you have more standard deductions. So I just want to let you know, hint, hint, clue, clue, that if you claim itemized deductions, you lose your standard deduction. So let's look at the Schedule A. You have medical and dental expenses. You have taxes you paid, interest you paid, gifts to charity, casualty and theft losses, job expenses, and most other miscellaneous expenses. When you complete this form, this is called itemizing. During tax time, most people, when asked, have nothing to itemize. So when you fill out this form, you will notice that you still hardly have any tax deductions. For example, let's look at medical and dental expenses. You would have to have 7.5% of your total income in medical expenses to even be able to claim this deduction. Go down to line 20 through 26. You have to have 2% of your total income in job expenses and deductions to claim these deductions. Most people, we notice, don't have the required amount, so they lose their deductions. To truly understand the tax advantage of a home-based business, please feel free to give us a call at 678-457-9493. Again, 678-457-9493. We'll be more than happy to do tax training and train your entire team on how they can have 400 tax deductions, be able to retain people in their business, and recruit people with these tax strategies. Okay, here's some actual facts for you. The average American had to work the first 123 days in the year 2007. Guys, it's the same for 2008 all the way up to 2016 and 17. So that means, guys, that if you really pay attention from January to around about the end of April, you are working for the Internal Revenue Service. Yes, I said it, to pay taxes. The IRS take an average of $100 more a month out of taxpayers' paycheck than necessary. Over withholding is nothing more than an interest-free loan for the government. Because of high taxes and not enough positive cash flow, in 1999, over 4 million households declared bankruptcy per the New York Times, and the government began to change the bankruptcy laws to make it more difficult for individuals to file. A typical household has $38,000 in debt since 1980. Consumer debt tripled to $33 trillion. Remember when I went over the personal versus the commercial code, and I showed you that if you made $50,000, a third of your income for taxes was $15,000, and you're only bringing home $35,000 a year. Now you see, because of that negative 15 that was taken out, why a lot of Americans go into debt, because they began to live off of their credit card and get more consumer debt, guys, and then they have to file bankruptcy. That's why we want to show you why it's very, very important for you to have a home-based business. I'm going to tell you right now, again, as an ex-IRS auditor, it is very important for you to have a home-based business. Please make note of that. So what I want you to do now is take 1 minute. I want you to take a pen and some paper out, and I want you to go ahead and list all of your household expenses. Yes, this is an exercise. Go ahead and list all of your household expenses, and we're going to show you how legally, ethically, and morally, by you attempting to work your home-based business with the purpose of making a profit, how you can write off over 400 tax deductions. So go ahead, grab that pen and paper. We're going to take 1 minute break, and I want you to go ahead and list your household expenses. And we're going to go over the information in just 1 minute. All right, and we're back. What I want you to do is now go to irs.gov. You should be there, okay? And I want you to pull down Form Schedule C. Now, you're going to love this form right here because this form is for that second tax code. That's for the people who have a home-based business, who legally, ethically, and morally went into business to make a profit. So now, guys, we qualify for over 400 tax deductions. Okay, so what we want to do is review some of the most common tax deductions that we have. And so you can understand how majority of your home expenses are now tax deductions. For example, you probably wrote down if you own a home, your mortgage, or you rent, you wrote down how much you pay for rent, your utilities like lights, gas, water, okay, car expenses, insurance, credit cards, child care expenses, and other miscellaneous expenses. What I want you to do is contact a TIFIS representative if you have questions about the 400 tax deductions you have as a business owner. We'll be more than happy to go over this information with you. But for time's sake, guys, we're going to go over a little bit of the most common tax deductions that you have. But again, you see the number below, 678-457-9493. Now, let's go over some of the most common tax deductions. The first thing I want to go over is the business mileage or the actual vehicle expenses. Okay, so on line 9 of your Schedule C, if you use your car for business purposes, you may be able to deduct car expenses. You generally can use one or two methods to figure your deductible expenses, your actual expenses, or the standard mileage rate. You can only claim either actual car expenses or the standard mileage rate. Now, actual car expenses include the cost of depreciation, licenses, gas, garage rent, lease payment, insurance, oil, parking fees, registration fees, repairs, tires, and tolls. The standard mileage rate, you may be able to use this to figure the deductible cost of operating your car for business purposes. The standard mileage rate, guys, is 54 cents a mile for all business miles. Please take note that every year the rate is adjusted, and I want you to understand that it doesn't matter what year that you get this program, you can follow along. Just make the notes of the adjustment. Okay. If you use the standard mileage rate for a year, you cannot deduct your actual car expenses for that year. So if you ask me, you say, Miss Davis, which method is the best to use for deducting car expenses? I always choose the mileage rate. But what you have to do is you have to use your own best judgment. Okay, but let's look at this example right here. And I want to back up for a second, and I just want to make note that what is considered a business mile? Okay, what is considered a business mile? If I leave my home and I stop at a gas station and I talk to someone about my business, I pique two people's interest about my business. That first stop, guys, will always be considered a personal mile. Now that I talked to two people, leaving the gas station, going to my home office, going to that business meal or presentation or what have you, now that is considered business miles. And again, like I said, we do trainings all the time. You don't have to worry. We'll be more than happy to train you. You can always give us a call. But let's say that a gallon of gas costs $4.50, which if it did, you guys would have a flip, right? And your car gives you 25 miles per gallon. You can actually write off the $4.50. That's the actual expenses. Or if I did 25 miles times the standard mileage rate, which is 54 cents, would be $13.50. So if you use the actual cost method, you would have lost $9. Let's use a bigger example. If you have 25,000 miles times 54 cents, that's 13,500 just off of mileage alone. You would have lost $9,000 in tax deduction if you use the actual expense. Now, again, the IRS can change this amount annually. Please take a note of that. At the date of this publication, the amount of the mileage rate is 54 cents per mile. So again, you see that you received a bigger deduction by using the mileage rate. So my suggestion would be to use the mileage method. Okay. Now, another deduction is business meals. I love it. We all go out anyway. You have lunch anyway. You have dinner anyway. You sit down at the table. You talk about business. Guys, this is huge. What I tell everybody when we do seminars, I tell people, please, when you sit down and you talk to someone about business, make sure that you write down the names of the people that was in that meeting. Make sure you make a copy, and this is for all your deductions. Make a copy of your receipts because receipts do fade, and the IRS do not accept excuses that my receipt faded. No, you want to make sure that you always think like a prosecuting attorney to keep your documentation. Okay, so let's look at our business related meal. The purpose of writing off your meals, guys, how you're able to do it is because I sat down with someone and I went over a business plan, or I piqued their interest in a business, or I actually did a presentation over dinner, over lunch. Now I can write off, if it's local, I can write off 50%. There's a 50% limit that applies to certain meals and entertainment that are not business related. Generally, business-related meals and entertainment expenses are subject to the 50% limit. It also applies to meals and entertainment expenses you have for the production of income, including rental or royalty income. It also applies to the cost of meals included in deductible educational expenses. You can go to publication 463 of the IRS website. Again, like I said, go to irs.gov. You can download publication 463, which is travel, entertainment, gift, and car expenses, also listed on line 24 of the Schedule C. Now, guys, when you go out of state with the purpose of doing business and you have meals, now you get to write off 100% of that meal, guys. So we can go over a little bit more of that at another time, but just to give you some of the most common tax deductions, meal and entertainment is a deduction that normally you get about 50% deduction limit on that locally. Let's look at communication tools, home phone deductions. On the first phone line, you can deduct the additional features plus long distance. The second phone line, you can deduct the total cost. Cell phones and internet service is a tax deduction as well. Please make sure that on your cell phone, and I had a lady that I represented for an audit, I told her to make sure that on her message, it was a professional message. Thank you for calling ABC and Associates. We're not available at this time. Please leave your name and number, and one of our representatives will return your call as soon as possible. Guys, you don't want to have a bunch of music on your cell phone or anything that can be looked at as a personal line instead of a business line, because now the IRS will then make a determination of factoring out of you having a total deduction and using a percentage they use to determine what is actual a deduction for your phone. So please be careful and mindful of that. Let's look at wages, hiring children and spouses. I love this. Child employed by your parents, payment for the service of a child under the age of 18 who works for his or her parent in a trade or business are not subject to Social Security and Medicare taxes. If the trade or business is a sole proprietorship or a partnership in which each parent is a parent of the child. How do I pay my child, and how is this a tax deduction for me? Guys, you can contact us. We'll show you how to hire your child in your business and make that a tax deduction. Wages are listed on line 26 of the Schedule C. Will my child have to pay taxes? No, your child will not have to pay taxes if you pay your child no more than $6,300 for the year, and the single standard deduction is $6,300. Then he or she owes zero. Remember, the standard deduction for single is $6,300. So if you pay your child $6,300, they pay zero in taxes. If your child is over 18 and you sign them up in a business, guess what? They have the same tax deductions that you do. They qualify for over 400 tax deductions as well. And what child you know that do not like driving a car and going everywhere, guys, we can now show our children how they can qualify for over 400 tax deductions. And I love the fact that you can even show your children how they're schooling. A lady called me and she asked me about how can she make her college tuition for her child a tax deduction, and I showed her how to do that legally, ethically, and morally. Okay, so if you want to know more about that, you have our number. You can give us a call. Also, one spouse employed by another. The wages for the services of an individual who work for his or her spouse in a trade or business are subject to income tax withholding and Social Security and Medicare taxes, but not federal unemployment tax. So take a minute to go over that information, guys, and to take that in. That's some of the most common tax deductions that we have. Take a quick minute and I will continue to give you some more deductions. Okay, other common tax deductions. Look at your Schedule C. You see on line 24A, you have travel. Line 13 of the Schedule C, depreciation. Line 27, business gifts. Line 18 and 30, general business expenses. Line 16B, auto interest. Line 14, tax deductible plans. Guys, this is some of the most common tax deductions that you qualify for: mileage, meals, entertainment, travel, utilities, supplies, guys, training, even workshops, even getting a program like this that you pay for education becomes a tax deduction for you. So you should be very, very excited about that. Now let's go over the W-4, guys. I'm so excited about sharing this information with you because the purpose of this Give Yourself a Raise program is to show you legally ethically and morally how to adjust your W-4 and give yourself a raise in your paycheck. What I just went over with you is the standard 1040 form, the Schedule A, and the Schedule C. Now we're going to cover the W-4 and its purpose and show you how, by completing this program, you should be able to go to your human resource department and turn in an adjusted W-4 program only if you have a home-based business. And if you do not have a home-based business, please give our office a call at 678-457-9493. Again, 678-457-9493. We can show you how you can have a home-based business and you can have what we call a laptop lifestyle. All you need is a laptop and a cell phone, and you are in business, as well as you need the internet, of course, but you're in business. And if you're looking for something which automation, digital marketing, online marketing, we have something, guys, to help you that qualifies for a home-based business. So let's just jump right into this income adjustment estimator. Give yourself a raise without going to your boss. The W-4 form, go to irs.gov. You want to print this form out, okay? Because what we're going to do right now is we're going to show you how to adjust your W-4. Let's find out what's the purpose of the W-4 form. Every wage-earning employee is required by law to have a Form W-4 on file with their employer's payroll office. The IRS Code Section 3402 authorizes employees to adjust the number of allowances claimed on their W-4 anytime a change in circumstances suggests that their income tax liability will be significantly altered. Anytime a change in circumstances. So that means that if I went from not having a business, just working a job, and now I have a job plus a home-based business, now legally, ethically, and morally, your employer is required to allow you to change your W-4 at this time and is required to immediately adjust your withholdings in accordance with the number of allowances, not exemptions, allowances you claim on your revised W-4. That normally means you will see the change in your very next paycheck unless you submitted a revised W-4 just immediately before a payday, in which case the change may be delayed until the following payday. What you want to do is just talk to your human resource department, ask them when you turn in that W-4, when would this affect your check, so you can know when to see that raise in your paycheck. Remember, the raise will vary depending on what type of job you work as well as how much you get paid. I want to make that clear. So that's the reason why we say that you can give yourself an extra $300, $400, $500 or more depending on how much is taken out of your check, what your job is, and how much you get paid. I want to make that very clear. So compute your estimated adjustments to income below, then use this information to fill out your W-4. Now you're going to see why I went over the Schedule C and the 1040, how it now becomes live to you to help you to fill out the W-4. So let's look at number one. How many business miles would you put on your vehicle during a 12-month period? So you want to, let's say that if you had for line one, let's say that you had 25,000 miles. You're going to multiply 25,000 miles by 54 cents. Go ahead and do that right now and record your answer. Okay. Number two, will you take any business trips this year? Okay. If so, go ahead and record your answer on how much it would cost for those business trips. Remember, forms update every year, so make sure you go to irs.gov for changes. Number three, business use of internet access, long distance, cell phones, and phone lines in-house for business? Please record your answer for that. Okay. Number 4, will you employ your children in your business? Remember, I said the standard deduction was $6,300. So for number 4, if you have 2 children, multiply 6,300 times 2 and record your answer. Remember, I said the standard deduction was $6,300. So if you paid your child $6,300, they pay 0 in taxes. That's why I'm using $6,300. Okay. Number 5, total deduction for equipment, furniture, and fixtures. Put that answer down. Remember, this is just an estimate. It don't have to be actual. And I know guys, getting your calculator and trying to figure out, what is it, honey? What is it? Don't worry. This is just an estimate. This is an example to show you how to fill out a new adjusted W-4. Let's look at number 6, out-of-pocket expenses for advertising, supplies, fees, dues, and memberships. Okay. Well, how many ads you're going to pay for, guys? Online, offline, your business cards, website, things of that nature. Think about that as well and record your answer. Okay. Number 7, estimated cost for entertainment and business meals. Remember, meals and entertainment, 50%. So just put an estimate down of what you think. So if you had 10,000 times 50%, that would be 5,000. You will put on line 7. Number 8, estimated deduction for business gifts at $25 each. Okay. At another time, we'll just explain why it's 25 and what you would do if you gave out more gifts. Okay. So $25 each is the limit. Put that down on line 8. Number 9, estimated interest on loans on vehicles used for business. Put estimated business use percentage and multiply interest total by that percentage. Okay. You can find that publication 463, travel, meals, and entertainment. Remember that from the irs.gov. All right. Number 10, estimated additional tax deductible dollars you plan to invest due to additional income projections. Example, 401k, which we know today is an OK, but just use that example, 403b, etc. Number 11, will you employ your spouse in your business? Yes or no? If so, put that amount down. Now, what you want to do is your total estimated business deductions at line 1 through 11. Put that right there on line 12, what the total. So go ahead and take quick 30 seconds to go ahead and add that up right quick, because I want you to be doing this with me while I'm going over it so you don't get confused later. So go ahead and add it up right quick. You should be adding line 1 through 11 and putting it on line 12. Income adjustment. All right. So you put that on line 12, your total. Now line 13 asks you for your projected home-based business annual revenue. Well, we're brand new in business. Let's just go ahead and put for line 13. A lot of times, guys, people don't make money their first year. So let's just go ahead and put 0 on line 13. Okay. Now you're going to subtract 13 from line 12. And this is your estimated adjustment to income. You're going to use this number on Form W-4 Deduction Adjustment Worksheet, line 4. And we're going to talk about where line 4 is on page 2 of the W-4. And you probably say, Jean, page 2? Exactly. A lot of people don't know about the W-4 page 2 and how it works. We're going to show you. So now you're able to fill out a new W-4. You want to read all directions carefully. So guys, we just added up our total deductions, our estimated deductions, adjustments to income, I like to say, minus our projected income for the first year, which we said 0. And that gave us a new amount that we're going to use on page 2 of the W-4. So some of you guys may have 30,000 or 40,000. Go ahead and remember, and we're going to go ahead and use that number. So now we're very, very excited. We are now ready to give yourself an immediate pay increase by adjusting your W-4. So let's review the W-4 form and increase our earning potential. Now, personal allowances worksheet. Let me show you how to fill this form out and give yourself a raise. We're going to use the example of a person who is single and have no dependents. Please, guys, use this according to how your life is, whether you're single with children, married with children, single, no children. It doesn't matter. This is just an example to help you to fill out your new W-4. Please use the example that applies to you. So on line A, we would put 1, okay? Line B, we will put 0. Line C, we will put 0. Line D, we will put 0. Line E through G equals 0 as well. Note, you have no dependents. You can't file head of household, no child care expenses, and no child tax credit. This is for a person single and have no dependents. So if this is you, you would only have a grand total of 1 on line H. So if you didn't have a business, you would put 1 on number 5 of the W-4. And that would be it. And what you just done is allow your job to withhold an interest-free loan for the government. And that's what over withholdings is nothing more than an interest-free loan for the government. The exciting thing is we have a business. So read the first point under line H. It reads, if you plan to itemize or claim adjustments to income, and we're looking at the W-4, guys, so follow along with me. If you plan to itemize or claim adjustments to income and want to reduce your withholdings, see the deduction and adjustment worksheet on page 2. Oh my goodness, page 2. I know you probably never seen page 2 of the W-4 in your life, and if you did, you didn't know what to do with it anyway. Most of the time when you fill out your W-4, a lot of people go and they ask their human resource department, what do I put down? How do I fill it out? And they tell you to put 0. Some people will file exempt for 6 months and then they go change it and put 0 for the next 6 months, trying to make up for it because they really don't understand how to fill out this W-4. When you put 0 down on your W-4, you just gave the IRS an interest-free loan with your hard-earned money. But when you go to the bank and get a loan, you have to pay high interest. And also, you have to qualify, right? So let's see how to get that money back. Let's go to page 2 of the W-4. Now, read the note listed at the very top of page 2. If you plan to itemize deductions, claim certain credits or claim adjustments to your income on your 2016 tax return. This is what we're doing. Line 1 states to enter an estimate of your 2016 itemized deductions. Because we are not itemizing, we will put 0 on lines 1 through 3. Remember, we're not itemizing. We're claiming adjustments to income. Remember the income adjustment estimator. You are now going to take those figures that you use. Okay, remember we added up all those figures. I asked you questions. Will you take a trip? Will you hire your children? How many miles will you go a year? Now we're going to take those figures and put that information on line 4. So let's look at line 4. Line 4, you should be on page 2 of the W-4. If you did not print that out, go back to irs.gov, print out the W-4, print both pages. That's what we're going over. We're going over page 2 right now. So look at line 4. It says enter an estimate of your 2016 adjustment to income. You will now enter your Schedule C deductions for your income adjustment estimator sheet that we use. For example, let's say my estimate, remember it's not actual, it's an estimate for 2016 would be $30,000 or $40,000. I'm going to say line 4, I'm going to put $40,000. Okay, so line 5, I would add line 3 and 4 together, which is $40,000. Okay, And I said, for example, let's say my estimate is 2016 was 30,000 for my deduction. I use 40,000. So that's what I want you to do. Use 40,000. Okay. So line 5, you add line 3 and 4 together. That's 40,000. Line 6, put an estimate of your non-wage, enter 0. Okay. Line 7, subtract 6 from 5, that enter 40,000. Remember, we're not using 30. We're only going to use 40,000. That's what we're going to use, 40,000. So if you see that, that's an error right there. No problem. No problem. So line 7, subtract line 6 from 5, enter 40,000. Line 8 said divide the amount on line 7, which is 40,000, by 4,050. At the time of this recording, that's what it asks us to use, 4,050, which equals 9.876. So when you divide that 4,000 into that 40,000, it comes up to 9.876. It said drop the fraction, which is 9. Line 9 says enter the number from line H, page 1. So remember, with us being single, all we had was 1. So now enter the number from line H, page 1 is 1. Line 10 says add line 8 plus 9 and enter total here. So 9 plus 1 equals 10. Now enter this total on Form W4. If it says if you plan to use the 2 income adjustment continuum, we're not doing that, guys. We're going to stop right here. Stop right here. Okay. Now enter this total on Form W4, line 5, page 1. Right at the bottom, line 5, you would put 10. Now you would put 10 on line 5. I tell people to put 9 on line 5 until they really get a little more tax knowledge and become familiar with the tax laws. When you put this total on your W4, congratulations. You just gave yourself an immediate raise on your check. Make sure you ask your human resource department, when will this take effect on your check? And if you have questions, please give us a call at 678-457-9493. Again, 678-457-9493. And one of our TIFIS representatives will be happy to assist you. So I want to say congratulations. You just filled out a new adjusted W4 because you made a decision to partner up in a home-based business. See, guys, at the time of this recording, we just elected a new president, and most people, they worry about who is the right one to put in the White House. Well, guys, I want to say you are the right one to put in your house. Congratulations. Congratulations for number one, partnering up in a home-based business with the intent to, guys, earn income for your family, create wealth, get out of debt. That is the purpose. And by you legally, ethically, and morally striving to build your home-based business, now you qualify for over 400 tax deductions. So if you follow the system, we just showed you how to give yourself an extra $300-$400 or more back, not just one time, but every month from your job. If you're making minimum wage and in a single tax bracket, you would get back between $200 to $300 a month in your paycheck. You just have to look at, like I said, look at how much taxes they're taking out of your check, and that will help you. But if you're a teacher, doctor, lawyer, or making a high salary, you could put back anywhere from hundreds to thousands of dollars in your paycheck every month. Isn't that a tremendous breakthrough? We may have just discovered the key that opened the gates that allow you to experience all the benefits, services, and bonuses that a home-based business has to offer. That's showing you how to keep your case auto ship or business requirement every month if you're in direct sales or network marketing. And guys, if you're in internet marketing or digital marketing or online marketing, it allows you to have money to be able to, do your ads or market online. That's what's so awesome about having a home-based business. That's showing you how to be able to truly create wealth. Remember, you must materially operate in the operation of your business before you can adjust your W-4. If you quit your business, you will have to If you quit your business, you will have to readjust your W-4, go back to paying high taxes, and lose that raise. Okay. Once your income goes up from the business, you can take that extra money and start getting out of debt. Use your tax savings and other available cash to get out of debt with the TIFIS Debt Eradicator Program. If you want this program, you can give our office a call at 678-457-9493, and we will help you. Also, the Institute of Financial Freedom Investment Solutions can help you build your business successfully and educate you on the tax laws. Most people don't understand the tax advantages and are being overtaxed and underpaid. We will teach you how to recruit people with this wonderful knowledge. Be on the lookout for our new book coming out, our series of books, guys, our Truth series. One of them is The Truth About Network Marketing, and other books that we have out there that's going to help you to build your business online, offline, you name it. Interested in being put on a waiting list for your autographed copy, you can give us a call as well. Also, I want you to check out our testimonials. It speaks for itself, guys. The system work. I want to read a couple of them for you. You can go and read the rest for yourself. But one lady said that I want to thank Miss Jean Davis with TIFIS LLC for being a total blessing for me and my family. Before using Jean program, my husband and I was losing $300 to $400 a month from his paycheck. Working as a construction worker, I'm a stay-at-home mom working with my business, and made it hard for us to keep our case auto ship every month. By utilizing the program and gaining understanding, we are aware of the tax advantage of our business. My husband received an immediate $400 in his paycheck from the adjusted W-4, and he receives this on a monthly basis. I want to thank Ms. Davis for this wonderful program that is not only giving us the increase, but a solution that allows us to keep our case auto ship every month and build our business. Thanks, Jean. That's from Mr. and Miss Jackman. Here's one from a police officer. You know, I'm a single man working in Georgia as a police officer. I was paying a lot of taxes because I'm in the highest tax bracket and I lose a lot of money each month. I met Jean one day in the grocery store and she overheard me say I was going to get a part-time job in addition to the job I was already working. She apologized for butting in, but she asked me what would it be worth for me if she showed me how to get a raise in my paycheck and not get a part-time job. I told her I would pay her $500. She laughed and scheduled a consultation with me to discuss her program. At the consultation, she went over the tax advantage program, adjusted my W-4 after signing me up in the business. She made sure I asked my HR department when would the effect take place. I called her and told her it would affect my paycheck coming up. To my surprise, once I received my paycheck, I called Miss Davis asking her who money is this? And I remember that phone call. It was hilarious. He was screaming, Miss Davis, who money is this? Who money is this? I told her I received an extra $800 in my check. I was in total shock. I couldn't believe it. Jean's program is a total blessing. It has really opened my eyes to the advantages of having a business. Of course, I went into business to make money, but the tax advantages are hilarious and outrageous. I could truly build my business. Thank you so much, Jean, for everything. And that's Mr. Alderman. And that's just some of the testimonials, guys, that we have. I just want to say I want to thank you very, very much for allowing me to share this information with you. We have other success tools. We have daily expense organizer because documentation equals representation. You want to record your expenses at the time it happened because we know that we forget, right? I trust a short pencil to a long memory any day. So you want to make sure that you record your daily expenses. And every month you have what we call a month end where we go ahead and take those daily expenses, calculate it, and put it in our monthly expense organizer. We have that for you. We also have the no need to fear the IRS. Just put on your audit proof vest. We have that information that breaks down how to protect yourself from audits and what you need to do if you get audited by the Internal Revenue Service. You can always order any of these programs by going to our website, tifisllc.com, and we look forward to serving you. If you need to schedule a personal consultation or business consultation, you can also give us a call at 678-457-9493. Again, 678-457-9493. You can email us at tifisllc at gmail.com. Again, Tiffis LLC at gmail.com.